Canada's Public Sector Accounting Board, PSAB, is proposing a new conceptual framework for the Canadian public sector. But what is a conceptual framework, and why should you care?
You should care because what PSAB is proposing could change what's reported in financial statements and how. The proposals affect what information is provided to the public by public sector entities. And the public sector makes up almost half of the Canadian economy, using tax dollars and other revenue raised from the public. So what is a conceptual framework? A conceptual framework is like a constitution for financial statements. It forms the foundation for financial statements, setting out what should be included in them and how, what statements should be prepared and for whom, the focus of each financial statement, and how to select, locate, and organize the information assembled to be included in the financial statements. So changing the conceptual framework is a big deal.
PSAB is proposing to replace its existing conceptual framework, which is set out in Section PS 1000, Financial Statement Concepts, and Section PS 1100, Financial Statement Objectives. 10 proposed new chapters build on the existing framework, adding new and clarifying guidance and grounding that guidance in the realities of the public sector environment.
Chapter 1 tells you what a conceptual framework is, what it's used for, and explains why independently set objective financial reporting standards serve the public interest.
Chapter 2 identifies and describes the characteristics of public sector entities. First, it highlights the purpose of public sector entities, to serve the public. This is fundamental to the public sector, and it drives the details in the rest of the framework. The characteristics of public sector entities include unique governance structures, multiple public interest objectives, inherent public accountability, the nature and use of public sector resources, and the volume and financial significance of non-exchange transactions. Public accountability is identified as the overriding characteristic of public sector entities. These characteristics are used to develop concepts and standards appropriate to the public sector.
Chapter 3 identifies the financial reporting objective. It is the goal and purpose of financial reporting, and everything else follows logically from that objective. Since the overriding objective of public sector entities is public accountability, the objective of financial reporting by public sector entities is to provide information for accountability purposes to the primary users of the reports, who are the public and its elected or appointed representatives. This chapter also explains that public sector entity financial reports should show how the entity is accountable for the extent to which it performed in accordance with its legislative authorities, including its budget, its financial condition, and its financial performance. Financial statements are only one part of a public sector entity's financial reporting. Chapter 4 describes the role of financial statements in meeting the accountability objective set out in Chapter 3. Chapter 4 is the bridge between the broader notion of financial reporting in the public sector and the reporting in financial statements. Financial statements are a fundamental component of the financial reporting of a public sector entity. They help fulfill a public sector entity's duty to be publicly accountable. From this point on, the conceptual framework sets out only the concepts and foundations necessary for financial statement reporting.
Chapter 5 sets out the 5 financial statement foundations. First, having an identifiable reporting entity. Second, the concept of control, for associating items, arrangements, and entities with the reporting entity. Number 3 is service capacity. Service capacity and changes in the service capacity are the focus of public sector financial statements. Fourth is the unit of measure, which is the Canadian dollar, not adjusted for changes in purchasing power. And finally, the basis of accounting, which is accrual accounting. These foundations underlie the existing conceptual framework, but not all of them are clearly identified, and they're not all in one place. So PSAB thinks it's important to clearly identify and better explain them. Chapter 6 proposes 6 high-level objectives of financial statements. Objective 1 sets out the scope of the entity that financial statements report on. Objective 2 sets out what should be reported about financial position. Objective 3 sets out what should be reported about changes in financial position. More specifically, the aspects of financial performance to be reported on. Objective 4 reaffirms the requirement to report an actual to budget comparison. Objective 5 focuses on reporting non-compliance with legislative authorities. And Objective 6 sets out a new objective of reporting information about risks and uncertainties. These objectives foreshadow what will be reported in financial statements. They are fulfilled through the financial statement package described in the Statement of Principles for a revised reporting model. To learn more, please have a look at our reporting model video, also on PSAB's webpage.
Chapter 7 sets out the qualitative characteristics of the information to be included in financial statements. These are relevance, faithful representation, verifiability, comparability, understandability, and timeliness. Financial statement information aims to achieve an appropriate balance among these qualitative characteristics while meeting the accountability objectives. The considerations to take into account in striving to achieve this balance among the characteristics include benefit versus cost, materiality, and prudence.
Chapter 8 sets out the elements of financial statements. Elements are the basic building blocks of financial statements. The elements of financial statements are assets, liabilities, revenue, and expense. No equity element is proposed. Deferred inflows and outflows that do not meet the definition of an asset or liability would not be recognized in financial statements.
Chapter 9 sets out recognition and measurement criteria. Let's look at recognition first. An item is recognized in the financial statements when the following criteria are present. The item meets the definition of an element. For an item that involves an asset or a liability, it is expected that the related future economic benefits will be obtained or sacrificed, and the item can be measured, and a reasonable estimate can be made of the amount involved. Now let's look at measurement. PSAB has concluded that the financial statements are prepared primarily by reflecting assets, liabilities, transactions, and other events at their historical cost, unless PSAB determines that another measurement attribute better serves the accountability objective for a particular item. Any PSAB requirement of a measurement attribute other than historical cost would be determined at the standards level and justified as to how it contributes to better information for accountability purposes. So, as you can see, no substantive changes are proposed to the existing general recognition criteria or measurement requirements, but what they mean is better explained. In relation to recognition, PSAB is proposing to add some general guidance on derecognition to its framework, as no general guidance on derecognition currently exists in the public sector accounting handbook.
Chapter 10 is new, and it's important. The purpose of Chapter 10 is to provide guidance and tools for communicating financial information in financial statements. This chapter defines presentation and identifies the presentation objective for financial statements and the presentation concepts that lead to achieving the presentation objective. This chapter sets out concepts for what to do with the financial statement information assembled after going through all of the filters in the conceptual framework and GAP, the qualitative characteristics and considerations, the element definitions, the recognition and measurement criteria, and the requirements of individual standards. Presentation is defined to include disclosure in the notes and schedules to the financial statements.
So that's it. A quick review of what PSAB proposes for a revised conceptual framework to ground public sector financial reporting and standard setting for years to come.
Please get involved with PSAB, and please respond to the conceptual framework proposals. Check out the project webpage for links to the related reporting model video and other supporting materials that set out and explain PSAB's proposals for a revised conceptual framework and reporting model for the Canadian public sector.
Thanks for watching!